I see the gathering throng of precious metals investors continuing for as long as uncertainty is fed by dysfunction and is fed by dereliction of duty. That's not an isolated critique of U.S. leadership. Seeing no event or transformational shift in the thinking of global leaders, I remain compelled to treat precious metals as the lifeboat necessary to move from imperiled assets, bond stocks, and fiat to safety and to solid ground.
Right.
These assets are indeed, I think, imperiled by the reversal of unsustainable financial structuring.
Well, and we're not talking necessarily about the mass markets buying gold right now. What we're talking about are what we talked last week, strong hands. These are people who buy gold for other reasons other than speculating on price.
Yeah, and the price moves here and there, less important. Reading HAI over the weekend, that's Hard Asset Insights Morgan Lewis puts together for us.
Right.
I agree that the secular changes afoot on a global basis in the compound spheres of trade and capital allocation and reserve asset management, those remain firmly entrenched. These changes are of a nature that one strong push up in the metals market and one strong pull down in price, that's not sufficient evidence of institutional reform, of bureaucratic sobriety, or a reset that cures the policy ills layered in over multiple generations.
Yeah. Well, again, when you're not working with short-term traders, it's sometimes hard to use the charts. I mean, but the charts are still saying that we're in a bull market, are they not?
Yeah. There are actors and agents that have so debauched our financial markets and wittingly or not, traded short-term expediency for long-term stability. And that's a part of the nature of democracy. We've explored that with previous guests. But such short-sighted recklessness, that sets the stage for a comeuppance, the likes of which we haven't seen in decades and perhaps ever.
Well, and you're talking about this irresponsibility. It has to do with printing money and credit, right? I mean, that's really what causes this. And
to accommodate promises that you really cannot afford to make.
Well, and so when the announcement was made of Trump's pick for the Federal Reserve, Kevin Walsh, the aspect that hit all of a sudden was, okay, everybody else is irresponsible, but Kevin Walsh is going to be responsible, and he's going to be a hawk. That's a perception. Nobody can step in there at this point and raise interest rates, can they?
Yeah, the mechanics of raising rates in an environment where you've got, growing towards $40 trillion in debt, not really possible.
Yeah.
The idea that he is somehow hawkish, we can all be settled in our minds that's not the case. His former colleagues, employees at Bridgewater, working with Ray Dalio for years, not the case.
Right.
It's just simply not the case.
Well, Trump's not going to put a guy in there that's going to cause a recession. Let's just face it.
No, in fact, the idea that he would be more hawkish and that somehow would be why Trump picked him is at direct odds with everything that Trump has been asking.
Right.
And yet the market somehow is triggered by this notion that we're in a new regime with new leadership at the Fed. And money and credit, these are basic inputs in the modern economy. And in fact, so basic we hardly think of them day in and day out. When there's too much of them, again, we think nothing of it. We benefit from the buoyancy that money and credit, in massive quantities, add to asset values the world over. And we just think that that's normal. Asset prices go up. Well, actually, they do when there's excess liquidity.
Right.
And, liquidity, like a rising tide, it lifts all boats. We take, just like we take money and credit for granted, we take liquidity for granted. And we attribute to ourselves and to our brilliance the results that it brings, which is, a bull market in all things.
And the ability to borrow. That's the credit side.
Yeah, we forget there's a dark side to credit. Credit ebbs and flows, and if you forget the reversal of the tide, the current will grab, the current will pull and rip you out to sea.
Well, and this is important to note. We have always talked about precious metals being a hedge, like you said, a lifeboat. You're not impressed with the momentum as far as it being a short-term trade.
I'm not bullish on precious metals because of momentum or because of short-term gains.
Right.
I remain bullish on metals because I see dysfunction multiplying on an exponential basis. We've often described gold as stupidity insurance. I'm bullish on metals because the cycle of greed has run its course, and the safe haven appeal of the metals is still in the early days. So as fears press from sort of the subconscious to the conscious mind, and that I think is going to be led by headlines and events and market behaviors which simply illustrate the scope of dysfunction. I think that's where global investors persist in, frankly, the only opt-out instrument that keeps them liquid and loaded with options.